Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate filings before they make you lose your senses. Today we're diving into a Form 8K, a current report from Nuveen, Churchill Private Capital Income Fund. Think of it as a financial alert. Someone just took out a pretty big loan and we're going to decode what it means. The earliest event reported in this document happened on April 8, 2025, so this is fairly recent news. Nuveen Churchill Private Capital Income Fund, or the fund, is getting a new credit line. It's called a Senior Secured Revolving Credit and Term Loan Agreement, basically a fancy way of saying they've arranged a loan they can draw from as needed, like a corporate credit card. The lenders are a bunch of banks, with Sumitomo Mitsui Banking Corporation acting as the main organizer or administrative agent. This loan is secured, meaning Nuveen is putting up something as collateral in case they can't pay it back. We will talk about what collateral they will provide later on. They're planning to use this money for general business operations, including investing in other companies. The initial amount they can borrow is $50 million, but it's tied to something called a borrowing base. This means how much they can actually borrow depends on the value of their investments. Think of it like a home equity line of credit, where your borrowing limit depends on the value of your house. They also have the option to increase the total loan amount to $300 million later on if they can convince lenders to provide more money. This increase isn't guaranteed. The loan is secured by the fund's investments, basically all the assets in their portfolio. So if they can't pay back the loan, the lenders get first dibs on those assets. There might be some exceptions, but generally the banks will get the first payment if the fund fails on its payment obligations. There's also a smaller portion of the loan, $25 million, that can be used for short-term needs like a swing line loan. Nuveen can borrow from this credit line until April 8, 2029. After that, the ability to access the credit line ends, but the actual loan isn't fully due until April 8, 2030. From 2029 to 2030, Nuveen will have to start paying down the loan using money from certain asset sales, or if they raise more money by issuing stock or debt. Here's where it gets a little technical, but bear with me. The interest rate on the loan will depend on whether they borrow in US dollars or other currencies. If they borrow in US dollars, the interest rate will be based on either term they borrow the money. If they borrow in other currencies, the interest rate will be based on rates specific to those currencies. Plus a margin, there is also a fee of 0.375% per year on whatever amount of the credit line they haven't used. The agreement also has rules about what Nuveen can and can't do. For example, there are limits on how much more debt they can take on, how much they can pay out to shareholders, and whether they can buy back their own stock. They also have to meet certain financial requirements like maintaining a certain level of assets and shareholder equity. If they break these rules, it could trigger what's called a default, which could allow the lenders to demand immediate repayment. If you want to read the full agreement, it's attached as an exhibit to this filing. The fact that they took on this loan means they have a direct financial obligation and potential risk. So what does all of this mean? Nuveen is taking on debt to invest in other companies. The interest rate will depend on market conditions and their own financial performance. There are risks involved, like the possibility of not being able to create the loan or violating the terms of the agreement. They are betting on being able to create more value than the cost of the agreement. They are betting on being able to create more value than the cost of the loan plus the interest, which is exactly what investment firms like this one do. It is interesting that their borrowing base to tend uptrend in their market, or they might think they can make better choices than other investors. This filing doesn't give us the whole picture. We'd need to look at Nuveen's overall financial situation and investment strategy to get a complete understanding. But it does give us a glimpse into how they're financing their operations and the risks they're taking. In conclusion, this 8K filing reveals that Nuveen Churchill Private Capital Income Fund has secured a significant credit line. While this provides them with capital for investments and growth, it also introduces financial obligations and potential risks. The success of this move hinges on their ability to generate returns that outweigh the cost of the debt while remaining compliant with the loan's terms. Thanks for watching. If you found this helpful, please like, comment, and subscribe for more Corporate Decoder videos.